These are the top 3 headlines in this week's weekly business brief. First up, Citigroup managers and consultants working on CEO Jane Fraser's reorganization have discussed job cuts of at least 10% in several major businesses. According to Reuters on Monday, the bank has warned of job cuts as part of the sweeping overhaul it unveiled in September, but has said it will estimate the scale of layoffs and cost savings in the current quarter. The reorganization, known internally as Project Bora Bora, according to CNBC, is intended to give Fraser more direct control as she seeks to simplify the Wall Street giant and boost its stock price. The discussions are at the early stage and the number of people asked could change. CNBC said, adding that the lender had hired Boston Consulting Group for the plan. Fraser's push to eliminate regional manager, co-heads, and others with overlapping role would translate into job cuts beyond 10% for executives, the report said. Now, if you don't think this is a banking crisis pushed by the feds, then I don't know what world you're living in. We've had rates gone through the roof. The lenders are scared to lend. They're technically frozen on lending. Real estate has stopped. Credit card default is starting to creep up. So this makes sense that this is happening here in the banking sector. And this is one of the big one, guys. So last week, Jamie Dimon said he was going to sell about 1 million shares. This week, we're seeing that Citibank is wanting to now cut 10% of their workforce, guys. That's a big number. So I'm starting to see a pattern here. SVB earlier this year went out of business, and a couple of other banks. There's a pattern here within the banking sector. Let's see where this is going to play out. And it's not looking good right now for the money supply people, the people that supply the economy with money, which are the bankers. Next up, office sharing company WeWork filed for Chapter 11 bankruptcy protection in New Jersey federal court on Monday. Reported by CNBC, WeWork said that it had entered into agreements with the vast majority of its secured note holders, and it had intended to trim non-operational leases. The bankruptcy filing is limited to WeWork's location in the U.S. and Canada. The company said in its press release, WeWork reported liabilities ranging from $10 billion to $50 billion, according to an initial filing. I am deeply grateful for the support of our financial stakeholders as we work together to strengthen our capital structure and expedite this process through the restructuring support agreement, WeWork CEO David Tolley said in a press release. We remain committed to investing in our products, services, and world-class teams of employees to support our community. WeWork has suffered one of the most spectacular corporate collapses in recent U.S. history over the past few years, valued in 2019 at $47 billion in a round led by Mayosi's son SoftBank. The company tried and failed to go public 5 years ago. The COVID pandemic caused further pain as many companies abruptly ended their leases, and economic slump that followed even more clients to close their doors. So this is an interesting concept. If you're not familiar with WeWork is a company that buys and or leases these big office buildings, and then they sublease or lease shared workspace. But when the pandemic hit and people started working from home, there was a big dip in demand for these spaces. So they're hurting. I personally can attest for that. I personally have an office space that I sublease to other companies, and in past years prior to COVID, I couldn't keep those things open. I would put them on Craigslist or Facebook, and within a week I'd have it leased up. It's all inclusive for $350, private office, private everything. And now it takes us months to rent one of those little office suites. And so I personally can attest to the pain. And so I can imagine for them at a big scale, having these big spaces and these big buildings, how this can happen to them. Lastly, conflicts in Europe and the Middle East risk triggering the most serious global crisis since the Second World War, Jamie Dimon has warned. According to The Insider, the JP Morgan Chase chairman and CEO said in an interview with UK Sunday Times that Russia's invasions of Ukraine and Israel's war with Hamas has made the world more scary and unpredictable. Here in the US, we continue to have a strong economy, he told the outlet, likely referring to the country's surging GDP growth and resilient job market. We still have a lot of fiscal and monetary stimulus in the system. But these geopolitical matters are very serious, arguably the most serious since 1938, Diamond added, referring to the year Nazi Germany annexed parts of Czechoslovakia and stepped up its persecution of the Jewish people. Financial markets have largely shrugged off the conflict in the Middle East, 1 month after Hamas strike on Israel. The S&P gauge of U.S. stock has climbed 1% since October 7th, with investors cheered by the idea that Federal Reserve probably won't raise interest rates again. The World Index, which tracks global equity, MSCI Global World Index, which tracks global equities, is also up and around 1% over the same period. Meanwhile, Brent and West Texas Intermediate oil prices briefly flared up after the Hamas attack on the fear that major producer Iran could become embroiled in a broader conflict. But the two benchmarks have since slid back to pre-war levels. Diamond, who heads the U.S. largest bank, said it would be futile to worry about markets when the world is on the brink of such a grave crisis. Agreed. Sometimes we think here in the U.S., and if you're listening to me and you're outside of the country, but here in the U.S., we tend to not think about these things, and sometimes these things are out of sight, out of mind. It's not in our backyard. These things affect us, and they will affect us when the world's largest banker is saying that it could have a grave danger, a massive. We should be taking massive precautions, and we should be paying attention to this. I believe that we need to be watching this and paying attention to this. So what do you think about the potential for the Middle East conflict to cause the most serious global crisis since World War II? That's serious. I'd like to get your thoughts on that. Share your thoughts down in the comments below and let's discuss. And this has been your weekly business brief. I'll see you guys next week. And remember to like and subscribe to the channel to keep up with the latest business updates. Peace out.